Hi friends and welcome back to the channel. I thought today I'll make a follow-up video to what happened yesterday. It was seemingly the end of the world, or more specifically the end of all the various investments we had made over the past years because it was so bleak and everything seemed to be going down. And of course we had a number of crazy headlines because the news loves these kind of things because it gets clicks. But more importantly, I should actually be making content about that the world is about to end and everything is collapsing, because look at it, I mean, that really gets views. And I probably should be making more of these videos if I wanted to get views, but I made a live yesterday about the situation and what I thought about it, and actually I saw it quite positively and not as negatively as many of my fellow YouTubers are doing. But of course, I understand that nobody knows the future, right? It could have potentially gotten much worse, but luckily it didn't, and it seems to be in fact recovering. So I want to just kind of go over the market and share a bit of thoughts in general, how to navigate investing through turbulent times or a couple of turbulent days where a lot of people seem to be freaking out, especially beginning investors. I got so many messages on Instagram, email, where people ask me, Kai, should I be selling? I'm really getting nervous, my portfolio is down. So I thought I want to address this in this video. So first off, let's have a look. One day later, after yesterday, everything was in the red. I made a live stream about this where I showed all the numbers. And of course, yes, everything was down, but actually the percentages weren't really that meaningful, at least in my eyes. We've seen yesterday the S&P down up to 3% or something, which of course in a day is a lot, but it's also not the end of the world. And that's what I also wanted to portray, to instill confidence in investors. And today, what do we see? Already up 1%. The markets in the US just opened, so it's still fairly fresh. Let's see where we end today. But yeah, overall, definitely, if I scroll down, we see pretty much everything up in the green on the chart over here. And today, also, let's not forget the year-to-date trend. Year-to-date for the S&P, we're still up 8.85%. It's a very strong growth that we've seen this year alone. So sometimes people only get fixated on the negative part, but they forget to see the big picture and see where we're coming from, which has been really quite impressive returns for the year. And then really, as we go down, pretty much everything is up in the green and looking very, very nice indeed. Now, granted, of course, some of the countries are still down a little bit. Of course, Japan, which was arguably one of the bigger reasons why we have seen the flash crash, I would almost call it, yesterday, the overall index dropping. But once again, I mean, those numbers are really not that worrying overall. And looking into the crypto markets, well, guess what? They're also making a little bit of a comeback. Now, not quite as much as they dropped yesterday. I think Bitcoin at one stage was down more than 12% in days. I personally also have a quite big Bitcoin allocation, so I definitely felt the pain, but I actually didn't open even my app. I just looked at the overall percentage, but I didn't open my Ledger Live app where I can see the total value of my portfolio because I knew it would just make me feel bad, right? And there's nothing I can do about it. So in times of these downturns, when things are going down, don't look at your portfolio because of course that is painful to see, right? So I just looked at the percentages, I noticed what is happening, I tried to understand the reasons behind it to see if this is a fundamental issue or just a kind of repricing. And as you can see over here, most of them now back up in the green, so looking quite good actually. Now, one thing I always think it's important to look at is the fear and greed index. And that index has different components, how they calculate these numbers, but basically it kind of gives you a temperature, so to say, of checking what's happening in the markets or overall investors' minds. And I think it's really interesting to see, obviously, where we are in any given moment. And you can see yesterday, the extreme fear was even worse. Now it already improved a little bit, but obviously we've also been in times of extreme greed, right? When everything seems to be going up, everybody wants to cash in. And usually that's when most beginner investors start because they see everybody making crazy returns and they start buying when the prices are high. But now the prices corrected a little bit, and instead of buying and capitalizing on that opportunity, a lot of people had fear. They either waited too long and not do anything, or actually sold a lot of their holdings and materialized their losses. Now, as a quick reminder, you only lose money if you actually materialize the loss, meaning you sell at a lower price than you bought it for. That's when you lose money. Because people also wrote me, Kai, I guess you lost a lot of money yesterday. And well, maybe on paper value I did, but since I didn't sell my assets, actually, I'm still holding on to the same amount of assets, right? If I have one house, I still own the same house, even if the value of it maybe temporarily dropped because of some reasons, what have you. But long term, I still own the same house. So if the market price for it increases, I make more money with it, right? And the same with profits, right? You only realize profits when you actually sell them and then you made the profits, right? Otherwise, it's just a paper, a theoretical value. So that's really something I can't stress enough. You do not lose money if you don't sell it. Now, if you do panic sell and you fall into the extreme fear, you're stressed about your investments going down in price, and you then sell maybe at a lower price than you bought it for, that's when you actually materialize the loss. And you can see the fear and greed index over a period of 1 year, how it changed, right? We had periods of extreme greed over here. Look at it. At the end of the year, we had everyone jumping on stocks and we've seen great returns. Everybody wanted to be part of the tech hype. And yeah, then again, market cooled down a little bit. People were more fearful. Then it went up again. Now they're very extremely fearful at some stage, right? Yesterday was extreme fear in the market. So you can see this is going up and down. I think in a way that also correlates to the price, right? I mean, once the price rises, people feel more confident. They buy more at the higher price and they get scared and have more fear at the lower price, which is kind of counterintuitive. And in theory, we all know we should be buying when the prices are low and the markets are dipping. But of course, I understand it, right? Because you never know, is it the start of something really serious or is it just a little market correction? And I've been there many times myself. And of course, nobody has the answer. Now, yesterday in my live stream, I did say that I think it's just a temporary repricing of the market because I don't fundamentally see any major issues that really worry me or that signal a start of a recession of many months or even years of downtrend in the market. And it's always something to really look at the reasons why markets are repricing themselves. And of course, if I would see a major recession coming in and all the signals pointing that way, then surely I would also maybe consider some of my investment decisions, even though personally I'm a long-term investor and long-term really means having the conviction to stay invested in your asset classes despite markets temporarily going down in value, right? Because that's the whole point of staying invested. Because guess what? These recessions and downturns in price will happen. They have happened again and they will continue to happen again. We see here the S&P 500 since this is 1993 all the time. It keeps on increasing, but then you keep on having little dips along the way. And that's just normal for any market, right? Any market is cyclical. There's ups, hopefully longer and more than the downs, but downs will happen. That's normal. There will be macroeconomic events. There will be flash crashes. This is very much normal. We've seen it back in 21. Of course, we all know what happened over there. And now we had 1 day of little bit repricing and the news made it seem like it's the end of the world. So really make sure you don't get sucked into that negativity of the news because of course they want to generate clicks through the headlines, but you as a long-term investor, in case you are, right? If you're trading, you can also make money on a downturn. You can short the markets, right? There's nothing to say against that. Personally, I don't short markets. I don't speculate. I don't short-term trade. I really focus on the long-term investing and being invested in the long term. For me, I'd rather actually, what I did yesterday, buy a little bit more than I usually do, even though at the same time, I also don't want to overcommit and spend too much money because what can happen if it really starts being a longer downtrend, then I might be regretting that I spent too much money yesterday. But if let's say a week, 2 weeks, 1 month from now continues to go down, I may not have enough cash to buy even more, either Bitcoin or S&P 500 ETF or whatever you want to be buying. So you still want to be disciplined, not to over leverage yourself and go all in, spend all your money because if it continues to draw down, like we've seen, a couple of months in the row, you still want to be investing continuously. I dollar cost average every single week. So yeah, that's just something to keep in mind. These drops have happened in the past and they most certainly will continue in the future as well. And once again, let's remind ourselves that the S&P 500 over a 1 year period is still up 16.43%. A really massive growth for passive index fund investing basically. Another reason why I continue staying invested, even if there was a prolonged downturn in the market, is the fact that nobody can time the market. As you can see over here, if you were to miss the 10 best days of recovery in the stock market over a prolonged period, and we're talking about here really a number of years, your returns would actually be less than half than if you were to stay invested. I think it's a really powerful reminder, especially for long-term investors. Staying invested is probably the best thing you can do. Of course, unless you really need the money. But yeah, I think staying invested is so powerful because, well, while we can't perfectly time the downturn, we can equally not perfectly time the days of the increase. And those days might come really sudden, one big headline, one thing happening in the world, and immediately the market jumps up. And if you were to miss the 10 best days in that period, as you can see over here, your returns would definitely be significantly less. So that's why I'm just not worrying about this. I have so many other things going on in my life and probably so do you. So I think it's just a good reminder to stay invested long term. Don't focus too much on the news. Focus on your own strategy. And of course, the strategy can change, right? I've done that myself quite a number of times. There's nothing wrong with this. You want to obviously optimize and maximize your money. So I went from individual share investing to dividend share investing to now basically really only focusing on one ETF, which is the S&P 500 ETF. I buy Bitcoin and real estate. This is my 3-pillar strategy right now that I like, that works for me, and I have full conviction in that. So even if I have a day like yesterday, we all went through that and my portfolio is in the red, well, I can lean back and have nothing to worry about because I know I have conviction, I know what I'm investing in, and I'm in it for the long term. All right, friends, so that's just my 2 cents on the topic. I hope I can distill a bit of confidence in you. Really don't fall victim for all those crazy news headlines. Obviously, there's a reason why they make it sound even worse than it really is in reality. Make sure you follow the right sources that give you objective market data. Of course, if there is a recession happening, which will happen eventually, we need to talk about it, but then we will see much bigger macroeconomic factors, starting to play out, unemployment rates really rapidly rising, GDP dropping, and many other issues where we start seeing major red flags around the world. We can then identify whether a recession is coming up or not, and then we can have a different discussion whether you still want to be investing the same or not. But just because a couple of little things happened in the world that came together at the same time, we had a little repricing in the markets. These things are normal, they have happened, and they will happen again. Next up, check out this video here. As always, thanks a lot for watching. If you enjoyed the video, give it a like. Helps the video to be seen by more people. Stay healthy, get wealthy, and I see you in the next one. Ciao.